Hello, thanks for joining me today. My name's Sean, I'm a Cape Town local and founder of McFarlane Properties KW Elite. Today I'm going to be running through a property market report for the southern suburbs of Cape Town for Q3 of 2023, and you can find the full report in the link in the description below. I'll show you all the lovely numbers and graphs as well. Interest rates have been a big driver of the property market over the last 3 years or so, and often I get asked, well, how does interest rate affect property prices? I've got good news for you. At the end of the video, I'll give a brief description of how this actually works, so stay tuned to find out. Before we get into the nuts and bolts of it though, it would be really helpful if you find the video useful or if you find the information valuable, if you could just hit the like button. And if you want to be kept up to date on more videos like these and lots of other stuff that I'm going to be doing, then hit the subscribe button, and you can also hit the notification bell to be notified when a new video comes out. And by the way, if you or somebody you do know is thinking of making a move into or around Cape Town, then let me know. I'd love to help. You can find my WhatsApp details in the description below, or my contact telephone number to give me a phone call, and my email address as well. Great. With that out the way, let's get into it. So this will be focusing on the southern suburbs, like I said, specifically Claremont to Kenilworth, which is the area I focus in. Now this is fairly indicative of the market in general in Cape Town as well, but if you would like to have a more local understanding of the market for where you are, whether it's in Cape Town or elsewhere in South Africa, I do have a lot of colleagues throughout the area and throughout South Africa who may be able to give you some insights. So let me know. As I said, my details are below and I can connect you with somebody who can help out. Okay, so let's get into it. I'm going to look at three things. First, I'm going to give a general overview of the market and where it is at this point in time. Then we're going to have a look at freehold versus sectional title. Those are two distinct markets or sub-markets, and it's interesting to see what's happening in both of those. And lastly, as I mentioned before, we'll be having a look at how interest rates are affecting price. Okay, so as a general overview, Claremont, Harfield Village, Kenilworth, they offer a large variety of property types, everything from apartments to smaller houses for those who may be looking at buying their first house, or those who may be looking at right sizing for their period of life, or sort of larger houses for people with families who'd like to be close to the schools. The community in the area is great. It also has very good access to all the lifestyle things that Cape Town is known for: the beach, the mountains, the parks, and various other things as well. So really easy access to get around. And then there are really good schools and universities in the area, and a lot of amenities as well, like shopping malls, restaurants, and various other things too. So it's a very popular area, and the market tends to be driven by quite a wide array of people who are looking to buy into the area. And in fact, given that the average tenure, so the average time that people stay in a house once they've bought it, or hold a house once they've bought it, is 12 years, it just talks to the fact that it is such a lovely area to be in. Okay, so let's look at some of the numbers and what the market is actually doing. So year on year, property prices have increased about 3%, and there's been some really nice growth throughout the entire year. This last Q3 though, the market has sat back a little bit and pulled back a little bit. So we've seen price growth decrease a little bit over this last quarter, and in fact it's come in at just over 6% lower than it was in Q2 of 2023. Days on market has been following a similar trend. Days on market compared to last year is about 41% down. Now, days on market, when it goes lower, tends to indicate we're moving slightly more towards a seller's market. So there's more buyers trying to pick up properties. Properties sell a lot faster, and you tend to find that property prices go up. Now, if we compare days on market to last quarter, so Q2 of this year, it's actually increased by about 20%. So that would indicate that there has been a slight pullback in the market, which has been shown by property prices coming down a little bit. And those two numbers together would indicate that we are shifting along the continuum slightly towards a buyer's market. I wouldn't say we're deep within a buyer's market, but there has been a definite shift, and that shift would seem to be driven by some of the interest rate rises that we've seen over the last year and a half. That impact is now starting to be felt in the market. But again, I'll talk a little bit more about that towards the end of the video. Now, is this doom and gloom for anyone who's looking to sell? No, it's not. And it really depends on what the reason is that you're selling and what your plans are. I would definitely say that if you are selling, sell and buy in the same market. Don't try and time the market. Don't try to sell now and then try and get a better price in the future. Do the business now in the current market. Otherwise, you can end up losing money if property prices do increase between the time that you sell and then you buy again. In terms of the outlook over the next 3 to 6 months, well, I think we've seen inflation come within the band that the Reserve Bank has targeted for it to be within. So I suspect that interest rates will probably remain steady over the next 3 to 6 months. In fact, we could even see it come down towards the end of that period. And if it does so, if it remains steady or comes down, I think we should start to see some more demand and some more activity come into the property market over the next 3 to 6 months, probably from about February, March time next year. And I certainly hope to see things become a little bit more active. So my gut feel is that we probably will see a little bit more activity moving into next year, and I certainly hope that that'll be the case. Okay, so let's have a quick look at freehold versus sectional title. So first of all, what is freehold and what is sectional title? So freehold are typically those properties that you'll see when you drive down the street, those freestanding houses. Some of them are semi-detached. You might also see some freehold houses in an estate environment. So those houses are all owned by the owner and the property around it, but then they're subject to a homeowners association. Now, sectional title is slightly different. Sectional title would be your apartment complexes, or sometimes it'll be townhouses within a small development as well. So you own your section, you own your little apartment or the little townhouse, and the property around it is owned by the complex itself, or it's owned in part by all the people who own a section. I can go into a little bit more detail if you'd like to understand sectional title more. Just hit me in the comments, let me know, is that something you'd be interested in? So what was surprising after COVID, we saw sectional title really struggle, and people, when the interest rates came down, really jumped into the freehold property market. We've had some really nice growth in that market specifically, but sectional title has struggled. We have started to see over the last year investors return to the sectional title market. People who are buying for kids who may be going to university, they've been returning to the market for apartments, and so that market has also now started to grow, and we've actually seen some really good growth over the last year in that sub-market as well. In fact, year-on-year price growth has been just under 10% for sectional title, and it's been flat over the last quarter. So from quarter 2 to quarter 3, it's been fairly flat, not really much price growth, but that is better than what freehold has done. So freehold has been just over 7% year-on-year growth, while it's pulled back about 3% over the last quarter. In days on market, similar story, although they are fairly similar. Days on market for sectional title, we're looking at 34 days at the moment on average, and for freehold at around about 40 days on average. Now those are two good numbers. It indicates that there's still demand in the market. If it was approaching 70, 80 days, then there would be a bit of a concern, but properties that are selling reasonably quickly still. And that's my quick overview of those two little sub-segments of the market. Hopefully you found that interesting. Again, if you want me to jump into sectional title a little bit more and give you a better idea of how that works, comment below. Otherwise, we're going to move on to interest rates now and understand how these actually affect property prices. So as I mentioned at the top of the video, one of the big factors influencing the market over the last 3 years has been interest rates. Normally interest rates go up and down quite steadily over a long period of time. In our case, COVID was a disruptor, as I'm sure we're all aware, and that caused interest rates to drop down quite substantially, quite quickly, and since then they've been coming up quite steadily, and we're now at 11.75, which is more than it was before COVID. So I'm not going to explain the dynamics of how interest rates go up and down, and this is going to be a fairly simple, straightforward example of what the impact on property prices are. But if you'd like some more detail on this and you'd like to understand interest rates a little bit more, pop a comment down below, let me know, and I'll do a separate video on that. For the purposes of this video, I'm going to do a quick example of how interest rates do affect property prices and what the levers and dynamics there are. Okay, so we've got somebody sitting there in 2019 before COVID caused all the chaos, and interest rates were at 10.25%. This person felt they could get a home loan for 2 million Rand, and they could afford the 19,600 Rand that you'd have to pay per month to service that home loan. At the time though, they had a look at things and they felt, well, I can actually rent a property for around 16,000 rand that offers me more than the property I would be able to buy in this part of Cape Town. So I'm actually happy to rent and live the life I want to live rather than buy. After COVID, interest rates came down to 7%. Now the situation changes somewhat. Now that 2 million rand home loan is only going to cost this person 15,500 rand a month. And that is in line with the rental that they're paying. So now they feel, well, maybe it is actually worth buying a property at this point because I can actually get one at an affordable rate that I feel comfortable with. Or they can stay paying 19,600 a month and they feel that they can afford that, but they can now buy a property for 2.53 million rand rather than the 2 million rand, and suddenly that opens up a lot more properties to them. Properties have 3 bedrooms rather than 2 bedrooms, and they've got a little bit more garden and it suits their lifestyle a little bit more, and so they decide to go onto the property market. The net effect is that you tend to have a lot more buyers jumping into the property market, both first-time homeowners and people who might be selling a smaller property and now feel they can afford a bigger property. But in this situation, you tend to find that the number of properties actually going to market doesn't increase at the same rate that the number of buyers entering the market does. And so you have the situation where there are a lot more buyers looking for properties than there are actually properties available to them. So how does a buyer then compete with another buyer for a property they want to get? It's on price. That's the only leverage they have. So the one buyer will offer 2 million, the next one will offer 2.1, the first one will come back and say, okay, I can do 2.2. And you start seeing this price escalation effect happening. Sellers obviously clock onto this, they see that prices are increasing, and they also, when they go to market, they adjust their prices upwards a little bit. And you get this inflationary environment where property prices start to increase. And it's exactly the same in reverse, or exactly the same in vice versa, when you look at interest rates increasing. So in this scenario, you've got your person sitting there with 2 million rand, COVID's gone, interest rates have dropped down to 7%, that 2 million rand home loan is going to cost this person 15,500 per month, and interest rates all of a sudden start increasing. They increase to 11.75% where they are today, and this 2 million rand home loan is now going to cost this person 21,700 per month. That is way more than it was before. This person now feels, okay, I can't afford this, I can't buy a home for 2 million, but they think, okay, well, what could I buy in line with what my affordability is? So if they wanted to keep paying 15,500 a month, they would have be able to buy a property of around about 1.4, 1.5 million. And that is a lot less than what they would have otherwise paid 2 years ago. In fact, the property that they would get for that amount of money might not suit them at all. And they might decide, okay, well, let's keep renting. I can rent a property that offers me the lifestyle I want to live, rather than buying something that isn't actually suiting me at this point in time. And as you find buyers leaving the market, deciding not to buy, you end up in a situation where now there's more properties on the market than there are buyers available to buy them. And now you've got the opposite scenario where buyers aren't competing to buy properties. Now sellers are competing to get a buyer in and put an offer on the table. And how can sellers do that? Well, they could do some things to the property, but that's typically not the best way to go. Typically they will look at price and they will bring the price down in line with the market. And so you have a situation where property prices start to decrease slightly as sellers compete with each other for the buyers. And we've seen a little bit of that over the last quarter. We've seen prices pull back just slightly, and it is a knock-on effect of where interest rates have gone over the last 3 or 4 months. They have hit a peak. As I said before though, it looks like we've hit the top of the interest rate rising cycle, so I expect that we'll see interest rates remain stable over the next 3 to 6 months, and in fact I would love to see them come down, and I'm hopeful that they will come down. And if that does happen, if they are stable, if they do come down, I think we'll see a lot more activity in the market. Hope that info and explanation was useful. As I mentioned, if you would like a little bit of a deep dive into interest rates and how they work, why they go up, why they go down, a little bit more understanding around how they impact property prices, make a comment. I will put a video together for you. So just as a brief summary of the property market and where we sit just at this point in time, it does feel a little bit like people are holding their breath waiting to see what happens towards the end of this year into the new year. I suspect that that's probably driven a little bit of the pullback, given that interest rates are quite high. People can't necessarily afford the property that they'd like to buy, and so they're just holding and waiting to see what happens. If the interest rates hold, or if they do come down a little bit over the new year, I do think we'll see a lot more activity in the property market, and we'll see things starting to improve again. Hopefully that's helpful to you. Let me know if you have any questions. As always, thanks so much for sticking around. If you found this valuable or useful in any way whatsoever, it would be super helpful to me if you hit the like button. And if you want to be kept up to date on when I do put out some new videos, hit the subscribe button and the notification bell to be notified for when those go live. And that's it from me. You go and have yourself a lovely day or restful evening if it happens to be evening when you're watching this, and we will see you soon.